Welcome to Markets Now. I'm Michelle Rourke with Kooima Kooima Varilek, and we've seen some mixed trade in both grain and livestock futures this morning. Brad, good to have you along. Cattle market, I know we've been, trying to come back here to the plus side this morning already, but a lot of ominous chart action. Last week, it looked like we put in a reversal after some pretty positive news in the market. Do you think that we have put a short-term top in the market?
Michelle, thanks for having me on. I always enjoy this a lot. The dynamic in the market, you're absolutely right, is Friday's action. And by the end of the day, I couldn't help but have the story ringing in my ears. At least the market makes the top the day the news is the best. News got pretty good last week relative to the cash, a couple higher at least. Cattle traded as high as 187 here in the north on Friday, and we also, I thought, significantly so, took the north premium to the south. South ended up at 185. That's characteristic of a bull market, usually when the north is premium. The north has a tendency to be either maybe lack discipline in terms of currentness more than the south does. So when we are premium, that's a nice sign that the numbers are maybe tighter and that the north is current. That's certainly how it feels around here to me. So anyway, the reversal down on Friday from a very important area in the chart. Everybody was watching that same gap on April. Cattle that we got within 30 cents of or so, and then failed. So, some follow through yesterday. April, though, did crawl back to unchanged. The back months were a little bit lower. So I think that, it's still kind of up for grabs, whether we're going to follow through off of these reversal highs. I guess I'm in the camp, you asked the question, that Friday's highs are probably at least a short-term top. I don't want to be confused to think that, okay, that's it, the highs are in for the year. That's not how I feel. But in the short term here, I think for maybe 30 days or so, let's see once how the market handles the next cattle on feed report. Let's see if we are indeed backing up cattle, which is what the slaughter level would suggest that we are. Weather's good. Demand's no runaway this time of year typically, although we do have a 308 box, which is pretty spiffy for this time of year, of course. So I guess put me down in the idea that the cash will hold together and the futures may set back a little bit to adjust the basis to a better spot.
Yeah, but you've been talking about how that basis has been contra-seasonal, right?
The basis is odd. Normally you get close to, typically the Junes are a discount. That's the biggest thing. That's weird to me. And up until last week's up in the cash, the Junes are either at or above cash. And I'm sure there's listeners out there who say, yeah, well, Brad, because there's less cattle in June. Okay, fine. I get it. I guess don't forget that the first quarter we were supposed to have 2% more according to the cattle on feed, and we're killing over 5% less so far year to date. So to me, the fundamental thing is a bit of a puzzle trying to put it together. I worry that you're backing cattle up into that slot because April is still a premium to the south. They got 185. They all claim to be hedgers. They may say, hey, I can't sell cattle at 3 under futures, so I'm going to hold them and wait for the convergence of cash and futures. I would much prefer that the futures were a discount to cash. That's a healthier place in the market. So, and maybe it's just what it is. Everybody, me included, is long-term bullish cattle. So you build premium into the back. I mean, some of it makes sense, right? That the back end carries a little bit more guts, right? Courage to be long, and so maybe that's the explanation. But it's something to keep an eye on. We'll watch the next 45 days. Should be kind of interesting.
Yeah. Things that we're watching, though, weights have been creeping up here, but at the same time, we have slaughter going the opposite direction, only 111,000 head yesterday. So talk about that dynamic.
Yeah, and then let's throw grade in there, too. Another one of those macro things that I keep an eye on. Grade's been improving, too, from where it was. The weights are contra-seasonal. You said it, very contra-seasonal the last 2 to 3 weeks, the comprehensive weights particularly. Going higher at a time when they never do. But, look, I mentioned the futures premium, but look at the weather too. Normally March is a difficult time here in the north. It's always muddy. The yards are trying to get squared away from winter. But the yards are October like here, and the performance on the cattle have been outstanding. So, whether there's been a conscious desire to hold cattle, or whether that's just that the performance has happened, I think a lot of it's the performance of the cattle. It's been really, really good. At least the performance on our own cattle here have been that way too. So I let's keep an eye on the weights. I'm disappointed in the slaughter level. I think that the question would be, are you killing the available supply or are you not? If the weights were continuing to downtrend, I'd say, well, okay, no problem. The USDA is off. We don't have enough cattle. We don't have all those cattle. But if the weight's trending the other way, I got to be a little careful.
Yeah. All right. So the hog market has been, I would say, consolidating off of recent highs here. And of course, we threw some negative news at the market again this morning with Tyson Foods, shutting the Perry, Iowa plant. But the market has handled it pretty well, don't you think?
Amazingly well. If this was a cattle deal, I don't think we'd be acting this good. We've gone through a couple of those plant closings together on the cattle and know what kind of response the market had to them. I was fearful yesterday afternoon when I heard the news, at least, Perry, Iowa, 8,000 head about, not their most efficient plant, talking about Tyson, not their biggest by any means. And yet you still go so if you were selling hogs there, you got to sell them, find another place to sell them. Further consolidation of that doesn't sound bullish to me, but I'll hand it to it. June hogs are only 20 lower, and that's when their plant closes. So maybe I'm worried about something that's not there. Maybe the packer sees tighter numbers coming. That's the first thing that comes to my mind. If they dare to close a plant. I mean, let's face it, these hog packers have been making money since 1998, when the industry became vertically integrated after those 8-9 cent hogs. It's hard for me to have a lot of sympathy that they aren't able to make money. So maybe it's tighter numbers coming, and maybe that's the bottom line.
Yeah. I do know cash is starting to roll over a little bit, so that might be a little bit of a factor here, it looks like. What about the grain trade? Corn market? Boy, we handled the wheat being down yesterday. We turned after the China cancellations, and we've absorbed all of this negative news. Do you think all the bearish news is in the market to the point where corn can continue to rally now that we've gotten past that 20-day moving average?
When you whip the horse, he had better run. You did a good job of explaining how the corn market especially has handled bad news here, and handled it really well. You and I talked for a couple of weeks about, watch the 20-day moving average. We hadn't been able to get above it since last December. That would probably be your first signal that the funds might start to uncover a record short position, and that's exactly what's happened. Now we closed above the 40-day yesterday on some of the months of the corn. Is there a great fundamental reason for it to rally? Not that I can find. In the north here, basis levels are no runaway. In fact, are real weak across the Dakotas. There seems to be enough corn, but if the funds decide to cover this big short position, I think there's a little room above us. Now, this is also the time of year where the market kind of moves its focus away from last year's big crop and starts to fret about what about this year? The too hot, wet, cold, dry, something. Usually there's something in the marketplace between now and May, one that gives us a little fluff. So as an end user, I would be sensitive to the idea that there's maybe a little bit more room above us on the corn than below us. But if we get a rally going into that first part of May, I would certainly be thinking about marketing. We've got plenty of it to carry out and going into next year's crop.
Yeah. But like you say, acting really good. We have lower openings and then we end higher. And that's the kind of market we like to see, is when they buy on the break. So hopefully we are getting some short covering there. What about the soybean market? Are you as confident that we've bottomed in that one?
I think we bottomed there, but we haven't had quite as flashy a look in a chart. We're above the 20-day, which is good. I'd like to see us get above the 40-day there. We failed there yesterday.
Right.
South America is still a big competitor for us there here, and going to be for a while with a product there that's a lot cheaper than ours. So as crazy as it sounds, I'd have a little more confidence in a 25-cent rally in the corn than I would in the beans, even though the beans seem to get that a lot easier. But I guess that's my story. I'm sticking to it for now, just because of the competition out of South America.
Yeah, and it is harvest time, so you're going to get some Brazilian harvest pressure at times, even though I don't think farmers are selling down there, are they?
I don't either, but South America is a cash crop country. When they harvest, it goes, and which is good and bad because temporarily it really floods the market. But hopefully we can get through this and then have a little more, be more competitive here after they're done.
Are you ready to call $12 beans yet? Are we going to get over that mark or not?
I'll say we get above that temporarily.
Okay.
At 10:30 on April 9. No, sometime in that spring rally. Let's see if we can't get our head above it temporarily. But again, I'd be sensitive to wanting to sell that, not buy it.
Okay. Good as always to talk to you, Brad Kooima with Kooima Kooima Varilek. That's Markets Now.